Hello guys and welcome to my channel. I am Trader Benny, aka Giver of Edge and King of Psychology. This video is going to be for struggling traders, right? Traders who are not profitable, who really want to become profitable. So if you've maybe been trying for a couple of years to maybe pass a prop firm challenge or get funded, right? This is going to help you to become, it's going to steer you in the right direction, because just like myself, a lot of traders put the cart before the horse, right? So it's almost like you're doing everything to make money. You genuinely want to make money, but you're not doing, it's not arranged. You're not doing the right thing. Your energy is in the wrong thing. All right, so in this video I want to give you 4 steps to profitability. 4 steps. These are from pure experience, right? I have literally used this to change my life, right? I've broken the jinx of poverty in my family. I have utilized these advantages that I'm going to be sharing with you, right? And this is the least I can do to help. Okay, so if you can take these things and then put them to work, you're going to eventually become great. Like, you need to master patience. You need to strike a balance between fear and greed. These are the things that I have done, right? I drink risk management like water. All right, discipline, consistency, those are my bread and butter. So you need to understand that if you don't fix these things, if you don't follow these steps, right, you will keep putting in the energy, putting in the effort genuinely, but you will not get the results you want. I'm going to share my screen now so that you can see, right? I've arranged them in an orderly way. Number 1, 2, 3, 4. If you follow these things, you tell yourself, okay, I have achieved this, fine. Now I have this, okay. Now I need to work on this. At least you know the things that you need to work on, right? So let's just go into it. I'm going to be sharing my screen. Every trader needs to work on. What's that first thing that every trader needs to work on? They need to build an edge. You need to build an edge. It's either you build the edge, you buy the edge, or maybe join a chat room or something, right? You need to just get edge, right? And it has to be mechanical. It has to be mechanical. It has to be statistically tested, right? You need to be sure that it can hold, right? Is working. And you can see here I said mechanical, and that is for a reason, right? Why do we want it to be mechanical? Because if it's subjective, it's either you have mechanical or a subjective system. If you have a subjective system, just like many of the new systems, smart money concepts and all these, some of them, not all of them now, some of them are very, very subjective, right? What order block are we using? What fair value gap are we using? What these are, all these things, right, make it subjective. So you cannot build traders' integrity by following a subjective system. At first, you just want to see the signal, right? That's what a mechanical edge is. You see it, even if you're trading SMC, you want clear-cut rules, not today you do this, tomorrow you do that, next tomorrow. No. You don't want to do any of those things, right? So you want clear-cut rules. That's a mechanical edge, and I'm going to be giving you a mechanical edge, right? At the end of this, I'm going to be giving you a mechanical system, one that you can use. Okay, it's a simple system. It's tested. It's got a good win rate, right? You can use that to make money. What exactly is an edge, right? An edge is trading is a zero-sum game, right? Trading is zero-sum game, and what it means is that if Mr. A has to make money, Mr. B has to lose money. If Mr. A makes money, if of course everybody put their money together, is it not? Everybody put their money together, right? Everybody put their money together. Now, when this money is sitting together, how do you get your own money? You have to take from the other person. So if you're building a trading edge, you must see in that system where the other guy is losing. If you don't see that, oh, I can see maybe you're trying to this is support, this is resistance, right? Right. If you cannot see the person, or let me say somebody's thinking that, oh, this market is going to break out, right? And he tries to buy here, right? And the market breaks out. Of course, he puts the stop loss inside here, right? The market breaks out and then does a fake breakout, goes to his stop loss. If you cannot see something like this is an example, right? If you cannot see something like this, right, to say, oh, I can see someone who is losing money, you will probably be the one who is losing. You will probably be the one who is losing. And I say this with, all the experience that I have, right? You will be the one who is losing. So you must see, okay, so of course, if this person did this and then you say, okay, no, I'm going to wait and see if this happens, then I'm going to wait for maybe a candle confirmation for me to place my buy here. Now, because there is someone who lost here, your buy is going to yield profit because someone has lost. So if you can't see who is losing, you are the one losing. And this is what we say, with the prop firms, right? If you're going to pass any prop firm, you need to be a profitable trader. If you're not consistently winning, if you don't have an edge, an actual edge inside the playing field, you cannot make money. There's no two ways about it. You can't make money. If we cannot look at the market and say, oh, who is losing money? See this guy, he's losing money. Whatever system you're using, you mustn't use this one. You will be the one who is losing money, I guarantee. All right. So I'm going to touch on the variables. I'm going to touch on the components, your persona. All these things are going to make up your edge. All right. So I see a lot of people who try to trade prop firms and past prop firms, and they don't even have an edge. They don't have an edge. This is the prerequisite for you to even attempt to trade a prop firm. You must have an edge. Right? You must have an edge. If you're not consistently profitable, if you keep trying, you will keep losing. It's not rocket science, guys. You keep losing. So speaking of a prop firm, right? I know that there's been all this noise about the prop firm and all of that, right? I'm not one who is quick to push out a prop firm, but one that I can tell you, who by the way is the sponsor of this video, is a good funded, right? They are a very, very, very good prop firm, right? At least I do not see any negative comments ever since, right? No, zero negative comments. Nobody has said, oh, they didn't pay me out, oh, they didn't do this. So I would recommend. Okay, so this is the Gold Funded Traders website, GFT for short. They have, you can see everything looks really nice. They have a lot of wonderful features. Yeah, they offer services to traders from the US. So if you are from the US and you are based in Europe, you can trade with the Gold Funded Trader prop firm. So another thing I really, really like is that you can trade directly from TradingView, right? They have Think Trader, which is integrated with the TradingView platform. So you can trade on Think Trader. You can see that right there, right? So they accept US. You can use the Think Trader. There's a lot of amazing features. They have payouts on demand, right? On demand, right? With the other prop firms, you may have to wait for your payouts, right? Their targets, profit target for phase 1 is 7%, right? It's not 10%, it's not 9%, it's not 8%, it's 7, right? It's 7. Okay, so it's 7%, right? And I think I really like that. Just have to tell you, they're actually a very good prop firm. You can see that they're affordable. This is a very competitive price, $398 for a 100K account. With the other prop firms, you should be talking of about $500, right? So this is actually very good, and you get 100% refund on along with your first payout. You will get 100% refund, meaning they're going to send back that money to you if you're successful with the challenge. Okay, and they have a 95% profit split, right? So whatever profit you're getting, you're going to get to keep 95% of that profit. All right. So yeah, I feel like they're really good, right? They're really good. If you go to the payout page, right? They have a payout page here on the website, right? They have a payout page here. There's nothing is hidden, guys. Nothing. I'm telling you guys, nothing is hidden. Okay, so there's no spread, no stop loss rule, no hidden. Nothing hidden. There's no minimum days. They have the one step challenge. They have the no limit, no time limit. Option. It's just a lot, right? And I think I really like the prop firm, right? I like the prop firm, and it's one prop firm that I will I will always recommend to anybody. All right, so let's get back to the. All right, guys. So if you wish to sign up with Good Funded, check the description below. All right, so the link is there. You can use the link to sign up. Now I believe I've made this clear, right? It is a zero-sum game. Okay, it's a zero-sum game, and if you cannot see, look at your chart, your system, or whatever it is you're doing, and say, oh, Mr. A is losing money now, it means you are the one who is losing money. All right. That being said, what are some of the variables? Okay, so the variables are a win rate. You're going to need to know what is the win rate, what is the risk to reward. So if I'm designing a system for myself, I have to say, okay, what should be my win rate? Do I want to win half the time, right? Make it 50-50. I'm wrong 50-50. If I'm wrong 50-50, I have to use a risk to reward, which is at least 1:1.5 or 1:2. Okay, so risk to reward is I'm risking 1%, I'm going to make 2%. Win rate is there's a 50-50 chance that I'm wrong or right, or there's a 60-40 chance, or there's a 51 49, right? So you're going to see what your win rate is, and I have to say this now: win rate is not fixed. Okay, you can generate the win rate over a certain amount, but it is variable, right? It's variable. Your win rate in December may be different from your win rate in November, right? So it's not the same. So when we talk about win rate, we're talking about the average, right? The average. What is the average? But that's not what this is about now. So I hope you understand that now, right? So this is your win rate. So you have to pick a win rate. Now, what is going to determine what kind of win rate you go for, right? Because some people say they want to get trades like 1:10. If you're going to go for trades like 1:10, you cannot have a high win rate, right? You can never have a high win rate. It is impossible. So it's not possible. You have to give up 1 for 1. If you want a high win rate, you're going to need a lower target. Because if you're risking, let's say 5 pips to make 50 pips, what's the chances that the market will not take out your 5 pips before getting to 50 pips? It's very high that the market will take out your 5 pips first before going to 50 pips, except you pick the bottom. And if you're trying to pick the bottoms, just get ready for a lot of losses, because you don't have confirmations, right? I'm already going into the components. You don't have confirmations. So you have to ask yourself, what do I want, right? What kind of feedbacks do I want, right? Components, we're talking about feedback. What kind of feedback do I want? Which of the win rates should I go for? Should I go for a high win rate or a low win rate system? It boils down to feedback. Do you want to be seeing a lot of losses, or you want to be seeing a lot of winning trades, right? Do you want more L's or W's? So if you're going for a high win rate, you know that you're going to be getting a positive feedback, meaning you're going to be frequently winning, even though your reward may not be high, right? You may just be taking 1:2, 1:3, but you'll be getting it more often than somebody who is trying to catch 1:10, 1:20, and all that. All right. So if you're going to take 1:20, is it profitable? Yes. But will you be able to take all the losses? Will you go on tilt? That's the question. Are you going to go on tilt? Will you become emotional after 3 losses? Will you still be able to see the next signal and take it after 5 losses? Right? That's the question. All right. So this is going to determine which one you will go for. All right. And all these things affect each other. If you're going to take a trade that has a confirmation, like let's say an engulfing candle, right? You want to see an engulfing candle before you find that somebody is picking this bottom and he has a better win rate. Before you find an engulfing pattern like this, you can see your risk is already very wide. It's wide. So your target Even if you're getting here, somebody who entered here can make 1:10, but you can only make 1:2 or 1:3, right? So you can see how it affects. Okay, so if you're going to get a confirmation, your risk to reward is going to be low, but your win rate is going to be high. I hope that makes sense, right? So if you're going to take a high risk to reward, your win rate will be low, and you're going to be getting a lot of negative feedbacks, which may make you become, go on tilt. Going on tilt is when you become emotional, when you're firing, trades without analysis, you're revenging on the market, you're increasing your lot size, and, you're just all tensed up, and you're trying to, just make money by force, right? So that's what happens sometimes after a lot of losses. Okay, so so I hope you get all of this. Now, how does frequency affect these things, right? If somebody wants to take a trading system that says, you're going to only see, let's say you're taking a trading system where you have only one trade in a month, right? One trade in a month. You may have a high win rate, right? You may have a high win rate because you're looking for one perfect setup all month, right? So, but I mean, if you're taking just one trade in a month, how many trades will you be able to take by the end of the year? And what's the chances that you will end up profitable, right? It's there, but it's not always there, right? Because even if you think that you can always make money with it, sometimes you have losses, right? So and the year is gone, right? So so your frequency, if you take a high frequency, let's say you say, I want to take as much as 10 trades per day. What's that going to do for you? If you want to take 10 trades per day, what's it going to do for you? It's going to make you sloppy in your executions, right? You will execute like an amateur. You execute like a complete amateur, right? Because you're not going to be calculated. You're not going to use your offensive coordinator, your defensive coordinators. You will not be able to do the right thing in terms of managing yourself, observing your emotions and all those things. It will be difficult because you're coming in and out of trades too frequently. So your executions will be very poor. Your errors will be too much. All right. So if you reduce it and say, I want to take 1 or 2, maybe that is okay. Maybe that is not okay. It depends on your persona, right? It depends on who you are, right? How many losses can you withstand in a day? How many losses can you take in a week? How many losses can you take? How many losses are you okay with? What is your risk appetite? Are you risk aversive, or you are, you're okay with taking, risk? All of these things are the things that are going to determine the kind of edge that you will use. So edge is a very important part. If you want to be a profitable trader, edge is a very, very important component, right? So you're going to need a mechanical edge, one that you understand, one that you believe in, one that makes sense to you, right? When I look at my trading plan, why am I, why is it easy for me to take those trades? It's easy because, I have a background understanding. I know that, I took this trade when someone was losing money. So I know that I'm going to make money. If I don't make money, I know that, okay, this is the one time, of course, when my edge does not play out. All right. So edge is very important. Edge is saying, okay, you have a higher likelihood of one thing happening for you over another thing. Right. So that is what edge is. So you can use the variables to put the edge in your favor, either using the win rate or using the risk to reward. Right. So you just need to look at your feedback and say, which one do I want and which one will I go for? This will now determine what edge you will develop. Right. So if you're not going to take confirmations, you're going to get a good risk to reward, but you're going to take a lot of losses. I believe that this is very, very clear. Frequency, I already explained that. So let's look at what else do you need to do. You need to execute that edge flawlessly and courageously. This is very important. Flawlessly and courageously. Flawlessly means that you cannot make errors. Look at if this is your equity curve, right? January, February, March, April, May, June, July, August, September. Now, if this is your equity curve, you're going up and all of a sudden you crash. Why did you crash? Why did you crash? It's a trading error. It's an error, right? It's an error. It's an error. It's a mistake. It's a mistake. It's emotion. You know, it's not the market. The market it doesn't care about you, right? You went on tilt. You went on tilt. Something happened. Something happened. All right. So you got to be able to execute flawlessly. And in order for you to do that, you have to look at your trade and say, where am I making mistakes? This was the game changer for me, my friends. What are my mistakes? What are my mistakes? You have to write it out. Oh, when I just start, maybe my first trade is good. My second trade, I mess up completely. Right? I manage my risk. I do everything right on the first trade. But when I go to the second trade, maybe because I won on this trade, on my second trade, I mess up. You take note of that. And then how can I fix this? How can I fix this? Oh, I'm prone to, you got to take note of your mistakes. What is stopping you from executing flawlessly? Have you accepted uncertainty? That we don't know. If I start scrolling my screen now and I show you what's the next bar, what's the next bar, what's the next bar, you will not know all what the next bars will be. So what it means is that nobody knows what's going to happen tomorrow. Nobody knows what's going to happen next. So the best we can do is to accept that this environment that we are operating, that we are trying to strive in, that we're trying to make money from, is an uncertain environment. The best we can do is to use our edge and execute it flawlessly and hope that it will save us. Hope that it will save us. Will you pick your setup shows today, you won't take it, and you don't cherry pick it. If you see the signal, you hit it. You don't use your gut feeling to say, oh, should I trade this one or I should not trade it. No, you don't do that. All right, so this is step number 2. When you have discovered your edge, the next thing you want to do is look at yourself. What mistakes, what am I doing wrong? Where am I making mistakes? What is happening? Why am I getting a drawdown? I'm trying to pass a prop firm, but I keep getting a drawdown. Why am I getting a drawdown? What is the mistake that I'm repeating? That mistake, my friends, if you're not careful, can keep you in this circle for another 8 years. I promise you. So you got to know, what is my mistake? Where am I getting it wrong? And how can I fix it? And friends, you have to understand emotions. I know that a lot of people say, oh, I want to trade like a robot. You can't trade like a robot. If you lose $100,000, you will not trade like a robot anymore, right? If you make $100,000, you will not trade like a robot anymore. So you can't say zero emotions. You have to understand it. What is an emotion? What is an emotion, guys? What is an emotion? How can I manage an emotion? How can I interrupt an emotion? How can I prevent myself from getting on tilt? I'm going to make another video where I would describe this elaborately so that this video does not get too long. All right. So in the other video, I'm going to go deep into what an emotion really is, how you can manage it, right? What are some of the techniques you can use? You go with offense, right? And then you go with defense. Defense is the point where you are now, you're defending yourself from that emotion triggering so that you don't go on tilt. This is very important. I'm not going to be able to explain all of these things, but just understand that the brain that you brought into trading is not going to make you profitable. It will not. I can assure you it will not. That mindset you brought can never. See, the mindset you brought into trading is the mindset that will make you snatch profits when you see them. But if you want to make money, you have to allow your profits to run. The mindset you brought into trading is the mindset that will allow you to widen your stop loss when the trade is going against you. That is the mindset you brought. It is your natural instinct. So, if you're going to be successful, you must learn, to understand emotion and manage it, right? You must learn to undo that emotion, right? Because you're taking a loss, you're scared. A loss means death. Losing means death. So that's what you're feeling like. Feel like you're done. So see what I'm going to do. I'm going to give you another, video. Hopefully, I make it very short, where you will understand what an emotion is. Emotion is biology. It's biology, right? I'll teach you what an emotion is in another video. And then routine. You have to have a routine. See, the main thing about a routine is preparation, right? Preparation and neutralization. Preparation and neutralization, guys. Okay, so see, what is the essence of a preparation? Is to remind yourself of your beliefs, of the truths, of the principles of consistency. What do you need to do? How do you need to, just to make you calm, right? That's your preparation. Is, you're checking, are you ready? Your stress level, your energy level, your confidence level, all these things, you're checking. How much sleep did you have? You check them, and then after the trade, you neutralize yourself. You don't want to carry the effect of a loss or a win into the next day. So after the trade, you come back for neutralization. If you won a lot of money, you have to be able to look at yourself and say, okay, I know I've won a lot of money. This is going to make me start to feel like a god. It's going to make me start to, so you're looking for the drawbacks. What do I need to do now? I have to be more vigilant. I have to be more vigilant to make money, right? If not, I would stop listening to my trading plan, right? So you look at the drawbacks. What are the drawbacks associated with making a lot of money? You neutralize yourself. If you took a lot of loss, what are you looking at? What are the benefits of this loss? What can I learn from it? Right? What is it telling me? Do I need to look at more, high probability setups? Something more, cleaner. I don't take sloppy executions. Right? What is it telling me? How can I improve? What do I do with my risk? Do I increase or reduce? Of course, if you're losing, you have to try to, at least keep it where it is or reduce it. You don't increase it. You don't fight back. You maintain uncertainty, a probabilistic mindset. All right. So I'm going to do other videos. I can assure you, I will make a lot of videos that that can help you to become better, become successful, become profitable. So guys, if this video made sense to you, don't forget to subscribe to the channel, hit the like button, share with your friends, show them these are the things that you have to do, right? And then stick around. I'm going to share another video as maybe a follow-up of this video, which is going to help you to cement some of these things that I'm teaching here today. All right, you're gonna ingrain those things. All right, so there you have it, the 4 steps that can lead you to profitability. Number 1 is develop a mechanical edge. Number 2 is execute it flawlessly and courageously. Number 3 is understand emotions. Number 4, have a routine. So you go through this 4 and say, okay, do I have an edge? Do I execute it flawlessly? Right? Do I now understand emotion? Do I understand the effect of loss and wins? Do I understand all these things? Do I know how to interrupt a negative emotion? Right? Do I have a routine? Do I have a performance card? A scorecard, something that you use to measure your performance, right? The goal is to go away from thinking about the outcome to focusing more on the process. All right, so until next time, guys, do have a wonderful one. Cheers, guys.